Hello traders, Gary Wagner here. It is approximately 11:20 in Honolulu, 5:20 in New York City, Thursday, the 17th day of May 2012, and this is the daily report for gold and silver, and what a day the precious metals are having. In a key reversal from this decline that we have seen over this month, we have gold up about $34 on the day. Kitco has it at $1575.30. $1571.44 is current print, and that would be the cash market. We have $1574.90 current print, and that was June gold. That puts it up over 2% on the day. Almost 3% of a move in silver, up 78 cents, 28.15. That's Kitco's price. 28.02, as you can see, is the current screen price, up 78 on the day. You know, we have a combination of three things happening today. One, we have short covering. All of those shorts that have been short through the month, they seem to be covering. You do have safe haven buying coming into the market, and finally some bargain hunting, buying that dip mentality. We have most of our charts in Henkin, and you're not really going to see the kind of move until we convert it into a daily standard candlestick chart. So to do that, I'm going to blow that up. Before I do want to show you this. On a Henkin candle, you always have it as a lagging indicator. Now, we are seeing the classic formation that I look for within a key reversal, and that is that doji-like candle, and you can see that right here. You've got that small green candle in the center, and if you notice, it's got almost an open and close identical. When we go to convert this, and on this system, which is NinjaTrader, all I really do is remove the indicator, because they consider it an indicator. Now you can really see what we're looking at, because you can see this huge $34 day. Any kind of gap that was here was filled. And because MACD is also a lagging indicator, you're not going to see any kind of a turnaround for at least a day or so, assuming the market does continue to move higher. Now, traders, really, this nice little move up, which I believe is probably a key reversal in the marketplace, came after the release, and this is yesterday afternoon when the FOMC released the latest minutes of the Federal Open Market Committee meetings monthly meeting, and they put on the table, so to speak, that quantitative easing of the U.S. monetary policy is still something viable and is still something that is a tool in their toolbox, as Ben Bernanke said last month. Now, later on, the Philadelphia Federal Reserve Business Survey was released, and it came out much lower, much weaker than expected. And that really was significant in that was really the first thing that gave the dollar any kind of a break, because as you can see, this market has just been up and away. We talked about the nature of the ascent in terms of the straight angle on the dollar index, and what you'll see is that when we convert this, of course, back to our standard candlestick by removing this study, you'll get a better indication of what we really saw today. And you're not getting a red candle, but you're certainly seeing some top action really in the marketplace, as you can see right in here. That without a doubt is showing us some sort of a consolidation within the market. And for our final chart that I do want to look at, when we take a look at the gold market, let me go ahead and put that in alignment so we can see the entire chart. And that's something that we looked at both in gold and silver yesterday, and that is the potential for this bottom as it finally got to very, very close to the lows that we saw. Let me try to line that up as straight as I can. And you can see that in the gold market, we basically came to, this would be considered a flat correction if in fact the market takes off from here, and you can see that it came very, very close to that. In silver, we had an indication of that, what I was calling yesterday almost a triple bottom, and what I mean by that, let's go ahead and convert this. We'll convert it in a second, traders, but let's go ahead and just draw a straight line across it so that you can see what I'm looking at. And once again, I apologize if it's not perfectly straight or parallel to the other lines. But we talked about this yesterday, that this was absolutely an area that we needed to look at, because even though this was a flashpoint, intraday lows, it hit it, but it only hit it, as I believe yesterday I said, for the blink of an eye. As you can see, we are right within those boundaries there too. So we could in fact be looking at a triple bottom. For that reason, any positions that are short in the market should absolutely be covered. We're probably going to be looking to see if we get follow through and we can go long in this market, but absolutely cover anything that's short. If you have profits, great. The aggressive traders, my conservative traders, will either have a small loss or a small profit. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Friday for another daily update and review and the weekly wrap up. Bye-bye.